So according to the law, there's nothing that actually prevents a company, a corporate plan sponsor from adding an alternative investment like a private equity fund into their 401k. But the big thing that's held a lot of companies back is fear of being sued. Adding investments that are expensive, risky, difficult to understand.
No transparency.
Exactly, no transparency. But the industry sees a moment with President Trump back in the White House that maybe things could change, that there could be some regulatory guidance, some legal changes that might open that opportunity up by making companies more comfortable.
Now, some accredited investors already get to tap into the private markets, correct? And that's usually what, you have to have $1 million in assets, or what are the rules? I forget.
Yeah, you have to hit certain thresholds around like your salary as well as your net worth. And so that's much higher. I do not want to quote the numbers for you off the top of my head, but certainly much higher than the average sort of retirement saver.
And the thinking is they're more sophisticated,
Exactly.
or the losses maybe won't hurt them as much.
Exactly, yes.
God forbid.
Yes,
Okay.
that they have like sort of a better idea perhaps than the average saver.
What do personal finance experts say about inclusion of private assets in a pension plan or 401k plan?
Tim, that is the cutest question I've heard in a long time.
Well, we know.
I'm just having fun with
Okay.
you.
Well, I'm just trying to get understanding from both sides. Like, if I worked in private equity, you know what I would say? I would say I want to get in 401k
Come on.
plans.
Yeah.
If I maybe didn't work in private equity, I would say, wait a second, there are probably some questions I should be asking about why private equity should not be in 401ks. And that's what I'm trying to do.
Yeah, no, exactly. It is a
I'm just playing.
It is a very, very fierce debate. So the private equity industry and proponents of private assets and 401ks will tell you that these investments have been in defined benefit pensions for decades, to great results, to market-beating returns, and that leaving the regular folks out in the cold is doing them a disservice, because by just being invested in stocks and bonds, they're not getting access to these more juicy assets, basically.
So you're talking about like the massive pension plans, like for
Yes,
teachers and so on and
exactly.
so forth. They've been in there.
Yep.
A lot? Like what percentage of the portfolio?
Oh,
Is it one of
gosh.
those like little minuscule exposure? or
I
no?
mean,
in a big way.
allocations, can be like 10% for private equity.
But
It's higher.
the thing
Yeah.
about that is I would just say a person's pension isn't necessarily dependent on the performance of those
Yeah,
assets. So what
exactly.
they get in retirement is a fixed benefit based on whatever they did, whether it was a firefighter or a police officer or a teacher. When you put it in the control of an individual, their 401k is what they have to retire on. So the ups and downs and the mark to market there is what they get.
Exactly. And so proponents of private assets and 401ks say the best way to do it is in a diversified portfolio like a target date fund. So by making it a slice, like 10% of a target date fund, you are not letting the individual basically put their entire nest egg into risky liquid assets. You're giving them a small slice, and you're limiting the risk there.
All I can think of is like a basket or tranches. Oh,
Yeah.
tranches. Remember that word? Like,
Yeah.
and so if the basket, there is some transparency, like you don't want all dogs. I love dogs, but you don't want all dogs in the basket, right? So there still has to be some level of transparency, or no?
Yeah, and the idea would be that you'd also have a professionally managed portfolio, right? Like, you look at the biggest providers of target date funds, they would be doing their job in kind of selecting asset mixes that they think are appropriate. And then the
Right.
corporate plan sponsor, the administrator, would be doing their job in selecting a mix of target date funds that they think are appropriate. So there'd be two layers